So we had a pretty eventful week last week. The markets was going sky high after Trump was elected for president, plus the Fed rate cut that came in 25 basis points. The Fed still stated that everything's going well and they're on track to hitting their 2% inflation target. So that's good. In this video, I'm going to go over the economic calendar for the week, the whole entire week. I'm going to go over the analysis in terms of the S&P, Dow Jones, and NASDAQ, plus go over investor sentiment, which I'll go through right now. Basically, the market as of November 6th increased their bullish sentiment from 39.5% from the previous week to 41.5% this week. And then the bearish sentiment obviously decreased, went from 30.9% from the previous week to 27.6% this week. And historically, these numbers, based off the historical averages, are actually offset. So previously, bullish movement, or not previously, but historical average is at 37.5%, and now we're sitting at 41.5%. So the market is quite optimistic. And then in terms of the bearish sentiment based off the averages, 31% historically versus 27.6%. So the sentiment of the market is more optimistic. Plus, if we look at the volatility index, indicating if the market is basically in terms of optimistic and contracts and options and all stuff, we've seen the volatility index drop, give or take about somewhere between the 20 points price point to all the way down to 14.93 points. So basically, it looks like further upside's coming, right? Now, the volatility index was higher, then potentially pullbacks could be happening, and then it always can be. It doesn't mean the volatility index is 100% accurate or to what the market will be doing, but it being low, plus the sentiment being high, plus indications, which I'm going to be showing the charts based off MACD lines, all that stuff is showing further upside. It's going to be pretty eventful for the weeks to come, leading up to the end of the year for sure. Now, in terms of the economic calendar, before I get to the technicals, for Monday, November 11th, 2024, we have Veterans Day holiday. Now, the bond market is closed, but the market is still operating on the regular hours for the trading day on Monday. And then for Tuesday, November 12th, at 6 a.m., we have NFIB optimism index. 10 a.m., we have Fed Governor Christopher Whaler speak. 10:15 a.m., we have Richmond Fed President Tom Barkin speak. And at 5 p.m., we have Philadelphia President Patrick Harker speak. And then on Wednesday, November 13th, we have some important numbers coming out. We have the CPI inflation numbers coming out all at 8:30 a.m. The Core CPI year-over-year, CPI year-over-year consumer price index. So CPI, they're expecting, previously it was 0.2, this time around 0.2, so flatline they're expecting. And then the CPI year-over-year, previously it was 2.4, this time around they're expecting 2.5. And then in terms of Core CPI has basically like energy removed from it for the most part. And previously it was 0.3. This time around, they're expecting 0.3 as well, so flatlined. The CPI year-over-year, by the way, that's not the core. They're expecting a slight increase. And then the Core CPI year-over-year, previously was 3.3. This time around, 3.3. So pretty much flatline. Again, the Fed is saying everything's moving in the right direction. And then they're still optimistic, pretty optimistic actually, that they're going to they're moving towards their 2% inflation target. So everything is on track for that. Now at 9:30 a.m. on the same trading day on November 13th on the Wednesday, they have New York Fed President John Williams delivering welcoming remarks. At 9:45 a.m. we have Dallas Fed President Logan speak. At 1 p.m. we have St. Louis Fed President Alberto Musalem speak. 1:30 p.m. we have Kansas City President Jeff Schmid speaks. And at 2 p.m. we have Monthly U.S. federal budget. And then at Thursday, November 14th, we have the PPI inflation numbers coming out. Before I get to that, at 7 a.m. we have Federal Reserve Gov Adriana Kugler speak. And then at 8:30 a.m. we have the following initial jobless claims. Previously it was 221,000. This time around they're expecting 225,000. And then we have the PPI inflation numbers. So previously 0%, and then this time they're expecting 0.2%, so a slight increase. And then PPI year-over-year previously is 1.8, Core PPI previously 0.1, and Core PPI year-over-year previously 3.2. Then at 3 p.m. we have Federal Reserve Chair Jerome Powell speak. I will be live streaming that, so if you want to be notified when I do live stream that, consider following, subscribing so be notified. And then at 4:15 p.m. we have New York Fed President John Williams speak. And then to wrap up the week on Friday, November 15th, at 8:30 a.m., we have the following. We have import price index, previously negative 0.4%. This time around, expecting is negative 0.1%. And then import price index minus fuel, previously 0.1. Empire State Manufacturing Survey. We have as well as U.S. retail sales minus autos. And then at 9:15 a.m. we have industrial production as well as capacity utilization. And at 10 a.m. we have business inventories. And then at 1:15 p.m. we have New York Fed President John Williams' opening remarks. Now I'm going to go to the market. I'm going to be looking at ETF SPY, ETF for the S&P 500, ETF QQQ, ETF for the NASDAQ, and then the Dow Jones. Now, in terms of SPY and the QQQ, they're the exact same thing as their ETF representations, just different ratios. And as you see for the SPY ETF for the S&P 500, we have an upward trend resistance line dating back since 2010, and then an upward trend support level dating back since 2010. And then we have two major crashes as well, dating back since 2010. The only thing is, though, there's only 2 touch points right now. Until we get to the third major crash and then get to that level, then we'll know if this line is actually legitimate in terms of potentially bouncing off of. But until then, we just have to wait and see. But between the upward trend resistance line and upward trend support level, we still have more room to go to the upside. Currently, SPY is sitting at $598.19. I actually checked this level right about here. Now, it depends on when we hit it, but if we were to go straight up, that level is currently around $660 and some change, 662, 663. But again, the longer we take, the higher the high will be. Mind you, I should state this. So I'm not a professional, so please do own due diligence and research before buying and selling. This is all just my opinion. But again, we still have more room to go to the upside. Now, the S&P, NASDAQ, and Dow Jones are showing further upside for the overall trajectory. And what I mean by that is the 1 year, 5 year, and all chart when I show the MACD line. But the 1 month, 3 month, and 6 month are showing not necessarily pullback, but like a few days of down days, because we've created all-time highs for all 3 of them. So for the S&P, all-time high right here. For the NASDAQ, all-time right here, all-time high. And we passed the July of 2024 all-time high, because the NASDAQ, Dow Jones, S&P all created an all-time high in July of 2024. The only one that did not pass it until recently, though, was the NASDAQ. The Dow Jones and S&P did pass it multiple times. Their July of all-time high of July 2024. But the NASDAQ didn't until recently. And then the Dow Jones right about here, all-time high as well. Let me just go to the all-time chart. Right about here, you can see we're all-time highs. So pretty impressive. The fact that we're all-time highs and indications are still pointing to the further upside. The investor sentiment is showing more bullish movement. The volatility index is quite low, showing potentially more upside. So the thing is, though, if I show the 1 month, 3 month, and 6 month, those are showing potential few days downsides, like basically pullbacks a little bit, but not necessarily pullbacks, because ultimately it's going to get pulled up anyway, regardless, quite significantly, where these pull downs are almost minuscule, not even noticeable at all. So I'll show exactly what I'm talking about. Just to show first the 1 year and 5 year for the S&P. Here's the 1 year MACD line indicating further upside. So MACD line indicates if we're in a bearish or bullish movement. Currently we're in the bullish movement, but when I showed the previous charts previously before the election, you could see that the 1 year, 5 year was kind of showing further downside. For example, here's the 5 year chart. Got amplified to the bullish movement, indicating further upside potentially, but it was about to cross over to the bearish movement, and you could see it did get to the bearish movement, but after the election got reversed completely, went straight up to the upside. These indications could always change, but they're pretty much getting solidified to the upside. You can see the alt chart, it was slightly going to potentially start coming down, potentially, but this was not like a low weak indication, but you could see it got amplified to a bullish movement. Now, what I mean by the 1 month, 3 month, and 6 month potentially showing downside. And again, the reason why I'm saying potentially is we're past, for example, the 1 year, 5 year, and all, plus the investor sentiment, all pointing to indications to the upside bullish movement. Plus we're above the 50-day, 100-day, and 200-day moving averages pretty much all across the board for all the charts. 1 month, 3 months, 6 month, 1 year, 5 year, all that stuff. So pretty much all expecting to go to the upside. The only thing is, though, if you go to the 1 month, 3 month, and 6 month in terms of the MACD line, you can see bearish movement right here, potentially downside. 3 month chart, bearish movement, potentially downside. 6 month chart, bearish movement, potentially downside, potentially. But to me, I would just take these as a few trading days as like just downsides, because we're at the all-time highs. Bullish sentiment is quite high, so it'd just be only a few trading days that would be on to the downside, and then ultimately still going to the upside. And the whole entire market is pretty much in sync, which is pretty crazy. The S&P, NASDAQ, and Dow Jones are all showing the exact same thing in terms of 1 year, 5 year, and all chart, all showing bearish movement to the upside, or bullish movement to the upside. Bullish, again, that's to the upside. Plus, they're all above their moving averages, 50-day, 100-day, and 200-day. And then the 1 month, 3 month, 6 month, all showing the exact same thing, showing a bearish movement to the downside. But again, that would be more a few trading days only. Nothing crazy, in my opinion. Now for the, and then the S&P, just to make sure, just again, like I stated, if I go to the 5 year chart, we still have more room to go to the upside. Again, that's about $660 and some change. Can we come down? Obviously we can. Things could always change. Now, in terms of the NASDAQ, we're looking at right about here. It almost looks like the S&P 500, almost the exact same, with the upward trend resistance line dating back since 2010. And then upward trend support level dating back since 2010. The only difference is in the NASDAQ aspect, it did break through in 2020 to 2022, came back underneath and had issues passing in March of 2024, and then did pass in July of 2024, created an all-time high with the rest of the market too. S&P, Dow Jones, and NASDAQ all created an all-time high in July of 2024. The only thing is, though, the NASDAQ was the only one that could not pass the July 2024 until as of recently, where the Dow Jones and NASDAQ, or Dow Jones and S&P, had multiple times they passed the July of 2024 all-time high, right? But exact same thing showing across the board. MACD line bullish movement, 1 year chart right there, 5 year chart bullish movement, reversed quite strong, just like the S&P. All chart, same thing, bullish movement more to the upside. So all bullish movement, 1 year, 5 year, all chart. And then in 1 month, you can see bearish movement, potentially down days, a few days, 3 month, potentially down days for a few days, potentially, and just small down days too. And then the 6 month chart as well. You could maybe they might not be that small of down days, but it's compared to how many up days we'll be having moving forward, potentially based off indication, sentiment, all stuff. It might be minuscule in my opinion. And then Dow Jones, same thing, 1 year chart right about here, bullish movement for 5 year chart, even stronger, just exact same thing, all of them, which is pretty much in sync, which is kind of impressive. And then the all chart solidified even more for the bullish movement. And then the 1 month bearish movement, 3 month bearish movement, 6 month bearish movement. So there's that. Again, all above the moving averages. Ultimately, if you want to bet on what's going to be happening moving forward, at least for the next few months, potentially, give or take, leading up to the new year, it looks like it's basically just going to be pointing up to the upside, unless some black swan event happens. So that is possible. Again, I'm not a professional, so please do your own due diligence and research before buying and selling. And then also, by the way, mind you, NVIDIA earnings will be reported not this week, but next week, I believe on November 19th or November 20th. So be on the lookout for that too. That could pull the markets to the upside or downside potentially. I'm expecting more to the upside personally, and that's basically it. I will be still doing the day trading challenge. It's coming up. I was supposed to do it this week coming up, but I'm pushing it a few weeks, potentially next week or a few weeks. Basically the idea is to day trade up to $1 million. It kind of sounds impossible, but actually more specifically, it's $100 to $1 million. But I think it's quite doable. I've been pretty successful the past 4 months day trading, and I've done the calculations in terms of compounding all stuff. I think it's doable. So if you're interested in that, consider following, subscribing so be notified when I do. And that's basically it. Thanks again for watching. Take care. God bless and peace.